This hearing will come to order. I want to thank Senator Johnson, who is filling in today for my ranking member, Senator Sessions. Welcome to you and to all of our colleagues who are joining us today, as well as a room full. Welcome to all of you on a really important topic today. We are going to be talking about a challenge that 40 million people around our country face today, and for many Americans who want to further their education and build their skills, taking out student loans has become a college prerequisite. But that debt can have lasting consequences for borrowers and weaken their chances of getting ahead. Ensuring more Americans get a fair shot is something many of us here in the Senate are very focused on, and a bill that is coming to the floor very soon, which will allow borrowers to refinance their school loans, is an important part of that fair shot agenda. I'll be discussing that legislation a bit more later, but first I want to thank our witnesses who are here with us today, who will help shed some light on the challenges that mounting student debt can pose for borrowers and for our economy. Today we're going to be hearing from Rohit Chopra. He is the Student Loan Ombudsman for the Consumer Financial Protection Bureau. And I'm very pleased to welcome Brittany Jones today. She is a recent graduate and the former president of the Student Virginia Education Association. We're also going to be hearing from Richard Vedder. He is a distinguished professor emeritus of economics at Ohio University. A college degree is a worthwhile investment, and for many, it can be a ticket to the middle class. We know that on average, college graduates earn more, and they tend to have lower unemployment rates than their less educated peers. A highly educated workforce is also good for our country. It strengthens our middle class. It strengthens the workforce we'll need to compete in the 21st century global economy. More and more jobs of the future will require post-secondary credentials or degrees, and in fact, in the coming years, as many as 2/3 of all jobs will require at least some college education, according to the Center on Education and Workforce. But to afford college, many people have to turn to student loans to help finance their education. In just a few moments, you're going to hear from Brittany Jones. She's going to be talking about how taking out student loans made it possible for her to get a college degree. And Brittany, I look forward to hearing more about your experiences. You've now worked to start a teaching career and at the same time paying down that student loan that got you through college. Of course, Brittany isn't alone. Dealing with overbearing student debt has become a reality for a growing number of Americans. The statistics are staggering. Today, the average college graduate will have to pay back around $30,000 in student loans, and a record number of young households owe student debt. Back in 1989, 16% of young households had student debt. By 2010, that figure had more than doubled, according to the Pew Research Center. More young people than ever before are dealing with more student debt than ever before, and that can have lasting consequences. Americans who took out school loans find it difficult to save and accumulate wealth. A recent study found that college graduates without student debt had accumulated 7 times more wealth than those who were paying back school loans. Crushing student debt isn't just hurting borrowers. There's mounting evidence that student debt is holding back our economy. Historically, young Americans have been a source of economic activity as they set up their households and start their own careers. But today, many are finding it difficult to save even for a down payment on their home, and the high monthly bills to pay back student loans can disqualify many people from even getting a mortgage. When first-time homebuyers aren't able to get a mortgage, it can adversely affect the housing industry as a whole. That's why groups like the National Association of Realtors and Home Builders Association have expressed concern about the overbearing financial weight of student loans. Student debt can stifle entrepreneurship. Young people who dream of starting up their own business aren't able to take the risks and the business loans that are usually needed when they launch a startup. Paying off student loans can prevent young people from saving for retirement or making the kinds of purchases that help further our economic recovery. Mr. Chopra, I know these economic consequences are what you and others at the Consumer Financial Protection Bureau have called the domino effect, and I'm looking forward to hearing more details in your testimony about those negative economic impacts. To address these challenges as a starting point, we need to ensure that student loan servicers, those are the companies who handle billing and track borrowers' payments, are treating those borrowers fairly and responsibly. Unfortunately, there have been alarming reports of student loan servicers mistreating borrowers. Some people have discovered their student loan servicer hasn't properly processed payments. There have also been complaints that private student lenders have put borrowers into default if a cosigner dies, despite the borrower being current on their loan payments. And I was very troubled to hear recent reports that Sallie Mae was overcharging military members on their student loans. Sallie Mae now has agreed to pay nearly $100 million in fines after charging military members higher interest rates. And I've asked Secretary Arne Duncan to investigate to make sure other student loan servicing companies are not doing the same. But we can do more to help borrowers. The Bank on Student Emergency Loan Refinancing Act is a bill from Senator Elizabeth Warren that I've co-sponsored along with several of our Democratic colleagues. That bill will allow borrowers to refinance their federal student debt. The Congressional Research Service estimates that this bill would let borrowers save $4,000 on average. Passing that legislation would put more money in borrowers' pockets so they can make ends meet, make down payments on homes, or start new businesses and help grow our economy. Right now, people can refinance their home loans or their business loans when interest rates drop. This bill will let borrowers with federal student debt do the same. And this should be a bipartisan issue. Just last year, for example, Republicans and Democrats came together to pass the Bipartisan Student Loan Certainty Act. That bill allowed new borrowers to take advantage of lower interest rates established by the free market. This refinancing legislation would use those same free market principles to help those with existing student loans. At a time when higher education is more important than ever to our nation's long-term competitiveness, a college degree shouldn't drown borrowers in debt. Now and in the future, we need to make sure that people who choose to further their education and build their skills are better able to afford college and manage their student debt. It is an economic imperative. To strengthen our middle class, to strengthen our workforce, and to help spark economic growth, Congress needs to address these challenges. So I'm very delighted to have this hearing today, and I would like, before I turn over to our panel of witnesses, we would like to hear from Senator Johnson.